Welcome back to Deep Dive number 91 of the Crynet GenShow. I mean, the first week of July 2026 has officially delivered that massive trend reversal you've all been waiting for.
Yeah, it really has. I mean, after that grueling June liquidity trap, the spring has officially uncoiled.
Right. Bitcoin just staged this, brilliant recovery, surging past $63,000. It completely blindsided the over-leveraged bears and triggered a massive wave of cascading short liquidation.
Oh, absolutely. And even more impressive, Ethereum broke out by over 12%. It comfortably settled near $1,770 as capital just flooded back into risk assets.
And the on-chain metrics are showing some massive coordinated buying behavior. Spot ETFs just snapped a brutal 10-day redemption streak with over $221.7 million in inflows.
Yeah, mega whales aggressively locked down over 270,000 BTC. They really established a definitive local bottom.
So today our mission is to unpack the data behind this bottom. We're diving into Ripple securing a provisional European MiCA license via Luxembourg, the explosive $26.7 billion real-world asset boom, and, well, shifting corporate treasury risks.
Because from JP Morgan warning of new volatility risks to the options market flipping heavily call heavy ahead of the July 8th FOMC minutes, the sentiment has completely transformed.
Exactly. The summer heat is hitting the charts, and momentum is shifting fast. So let's get straight into it. How do we pivot so violently from extreme fear to this massive squeeze?
Well, you mentioned a coiled spring earlier. I'd actually argue it wasn't a random pump at all. It was a synchronized accumulation phase.
Wait, so you're saying this was highly calculated?
Oh, completely. While the retail crowd capitulated at the end of June, institutions deliberately absorbed that panic. I mean, locking down 270,000 Bitcoin in 2 weeks is not a passive move.
Wow, right. So they were cementing that local bottom on purpose.
Exactly. And look at Ethereum. It cleared those long-standing downsloping trends, which, really sets up a near-term test of the $1,800 to $2,000 zone.
So this aggressive buying, it isn't purely speculative. It feels like traditional finance is finally treating the blockchain like actual global infrastructure.
Yeah, they really are. The real-world asset market just crossed $26.7 billion, which is major proof of that maturing institutional plumbing.
That number is just staggering. And Solana is aggressively eating up market share there, right? I think they scaled from under 500 million to 3.62 billion.
Yes, exactly. While Ethereum still anchors about 15.9 billion. But this maturity really connects to Ripple's monumental regulatory leap this week.
Ah, right. You mean the provisional European MiCA license via Luxembourg's CSSF?
Precisely. That pan-EU compliance is a total game changer. It fundamentally secures corporate cross-border settlement. I mean, it pushed XRP up 10.5% to $1.14.
Okay, but let me push back on all this bullishness for a second. With institutional maturity comes highly complex trading behavior.
Right, and entirely new volatility risks.
Yeah, because options markets are heavily call-heavy ahead of the July 8th FOMC minutes. So aren't we just walking right into another over-leveraged trap?
That is a totally valid concern. You can validate that with JP Morgan's new warning about two-way risks.
Two-way risk, like corporate treasuries not just buying and holding anymore.
Exactly. Major corporate treasuries are shifting to algorithmic selling. That makes the historical, one-directional accumulation incredibly unpredictable.
Wow. So they are actively trading their massive stacks based on algorithms.
Yeah, to hedge their positions. And you see this in the rapid expansion of decentralized perpetuals. Look at Hyperliquid, with HYPE up 12.5% to $70.70.
Oh, wow.
Yeah, or Deribit's new $600,000 The Island options arena. It's all proof of this highly sophisticated derivatives shift.
That makes so much sense. I mean, weeks like this are the ultimate reminder of why you stay grounded and focus on the data when everyone else is panicking.
Absolutely. The retail crowd capitulated, but smart money put together one of the largest accumulation blocks of the year.
And looking ahead into July, architectural expansions like Ripple, Hyperliquid, and the RWA boom, they just do not sleep.
Right, but don't let the short-term green candles make you reckless. You really have to watch how macro desks position themselves post-FOMC.
Exactly. Which brings me to a final question for you to ponder this week. If massive corporate treasuries are now actively algorithmic trading their holdings instead of simply HO dealing, how will that fundamentally alter the traditional 4-year market cycles going forward?
That is a massive question that changes everything we know about cycle theory.
It really does.
Yeah.
So to everyone tracking the markets, stay consistent, keep your head clear, and execute your plans. Protect your private keys, stay disciplined, and we will see you on the next deep dive.